Hello and welcome to this session on one of the most challenging topics in capital gains. Real estate transactions involving joint development agreements, JDAs. This area is full of practical complications involving timing of taxation, deemed consideration, and transfer definitions. We will explore all the key provisions including sections 45, subsection 5A, section 2, subsection 47, clause 5, section 50C, section 194 IC, and their practical interplay through a comprehensive problem. Now, let's start with key sections. Section 45, subsection 5A. It is applicable only to individuals and HUF, where land or building is given for development and consideration is in the form of constructed area plus cash. Nothing but you have a land or a building where you give it to some developer. In return, he pays you in a way of constructed flats or cash or both. Now, this will become a joint developer agreement. Okay, so for this, capital gains will be taxed in the year in which completion certificate is issued, not when the joint development agreement is signed, okay, or registered. Full value of consideration will be FVC. Full value of consideration will be stamp duty value on completion date. Completion date plus cash. So now we ask stamp duty value of what is on developer's share. Developer's share. So stamp duty value on developer's share on completion date plus cash. Okay. So we will go through this section with the help of an example. But first, let me explain what are the key sections involved in this provision. Okay. So the next section will be section 2, subsection 47, clause 5. It says transfer includes giving possessions under section 53A of Transfer of Property Act. Transfer includes giving possession under section 53A of Transfer of Property Act. 53A of TOPA, Transfer of Property Act, which says if you are giving possession to some person as a transfer of property, that is also deemed to be transfer according to section 247(5). Okay, so even if the legal title is not transferred, transfer is deemed when possession is handed over under JDA. When possession is handed over, even the legal title is not transferred. The developer still has, the title still belongs to the original owner. The transfer is not yet done. But when the possession is handed over under JDA, then this section gets triggered and it becomes a deemed transfer. Okay. So can trigger capital gains earlier unless 45(5)(a) applies. Before it used to be like that. Before 45(5)(a) was enacted, it used to trigger capital gains even before the possession was transferred. Okay, now that changes. Now, the next key section will be section 50C. It says that if stamp duty value is greater than sale consideration, then sale consideration will be equal to stamp duty value. deemed sale consideration. Deemed sale consideration. It's just like section 50 CE, where we saw that fair market value, if it is more than sale consideration, the full value of consideration will become the fair market value. Just like that, instead of fair market value, here we say stamp duty value. Apart from that, the point is same. It is we use the stamp duty value to compute full value of consideration for land or building in normal sale. Okay, not always in JDAs, even if 45(5)(a) overrides. You understand, right? So, only if it is 45(5)(a), okay, then it's not that sale consideration will be equal to STV. Sale consideration will be equal to STV if STV is more than the actual sale consideration, even if 45(a) doesn't apply. Okay. So next section is, we'll see combined section 49 and section 242. Okay. So 49 refers to cost of acquisition. 242A speaks about period of hold. When it is long term, when it is short term, these kind of things. Also, when the period of holding should be taken into account for these kind of transactions regarding JDAs, and how to calculate cost of acquisition. So this is what these two sections speak about. The last section that we take is TDS section, section 194 IC. Section 194 IC is whenever there is a provision, whenever there is a provision related to payment with respect to immovable property beyond 50 lakhs, okay, the developer must deduct 10% TDS on monetary portion, that is cash portion, which will be paid along with the flats or constructed property as per the agreement, should be paid to the landowner under JDA. Okay, so these are the things: 10% TDS on monetary cash payment. Most important thing to be remembered in this is, even when possession or certificate of completion takes place after cash payment, TDS should be deducted only when actual payment is made. So the certificate of completion can happen in 2026, but that doesn't matter. When you pay the cash in 2024 itself, you are obligated to pay 10% TDS. You are obligated to deduct 10% TDS on the payment that you make to the landowner. Okay. Now let's take a comprehensive scenario. Okay. There is Mr. A. Okay. He owns a land since 2004. Let's take the facts first. Cost is 10 lakhs. Okay. Then enters into JDA. With XYZ developers on 1st April 2021. Okay. Now gives possession in the same FY, that is FY 21-22. Okay. Then he will receive 6 out of 10 flats plus 50 lakhs in cash. Just 50 lakhs in cash. Then completion certificate is issued on 31st March 25. Okay. Then SDV of 6 flats on completion will be 2.4 crores. Next, A sells 2 flats out of those 6 flats on 15th July 2025 for 90 lakhs. FMV of 2 flats is 80 lakhs. So now let's see each concept together. Okay, so let me put the facts once again. Mr. A owns a land since 2004 that cost 10 lakhs. That costed him 10 lakhs in 2004. Then he enters into a JDA with XYZ developer on 1st of April 2021. Okay. Then he gives possession in FY 21-22, the same year itself. Then agreement states that he will receive 6 out of 10 flats that are being developed plus 50 lakhs in cash from XYZ developer. Then he gets the completion certificate on 31st of March 2025. Okay. So now SDV stamp duty value of those 6 flats will be rupees 2.4 crores. Mr. A sells 2 flats on 15th July 2025 for 90 lakhs. Again, they have given fair market value of 2 flats will be equal to 80 lakhs. Okay. Now, we will answer each question one by one. Okay. The first question is, when is capital gains taxable? Okay. So, when is capital gains taxable? See, they say possession was given in 21-22. Okay. Possession given 21-22. Completion certificate in 25. 24-25. Okay. So, here only we actually, here only we have some doubts. Okay, we get doubt as to which date we have to consider, right? So, if so Mr. A. So Mr. A is an individual. For him, he entered into a JDA with XYZ developer, which is a registered joint development agreement, right? So section 45, subsection 5A kicks in. Okay, so when section 45, subsection 5A is applied, okay, the date of completion certificate will be the date of transfer, will be the date in which capital gains will be taxable. So in this case, we will take completion certificate. So I'm putting in an alternate scenario here. Instead of Mr. A, just imagine if there is a firm called ABC. Okay, ABC and Co. They enter into a joint development agreement with XYZ. Okay, then section 45, section 5A will not be applicable. So it will be taxable in FY 21-22 itself, because if it is a firm, okay, 45, 5A will not be applicable, then it will be date of possession, that is FY 21-22. Okay, FY 21-22, because section 2, subsection 47, clause 5 states that transfer of possession is also a transfer. So this position. But if it is 45(5)(a), this provision will not get kicked in. You will take date of completion certificate as the date of transfer. Do you understand? Okay. So the next question is, what is full value of consideration? Okay. They say 6 flats. Okay. SDV of 6 flats is rupees 2.4 crores. Okay. Now, he also got an additional cash of 50 lakhs. So total is rupees 2.9 crores. This is a full value of consideration from the joint development agreement. Okay. Now, what is cost of acquisition? What is cost of acquisition? Here, original COA is how much? Is 10 lakhs, right? Now, we will apply indexation because it has been held for more than years. Okay. Now, let's take 10 lakhs into, assume that, in the current year it is 2025, it is 348, CAA is 348. Assume that it was, it was CAA in 2004, I guess, right? Yeah, 2004 is 130. Is 130. So you get rupees 30.8. Okay. So the next question is, what is the capital gain on transfer of land? Capital gain on transfer of land. So earlier it was a land, in that it was jointly developed. Initially we saw what is the full value consideration for the 6 flats and cash. Okay, so whatever they have given, it's a thing. So cost of land we have seen. Now capital gain on transfer. I'm sorry. Earlier we saw how to compute full value of consideration. Next we saw how to compute index cost of acquisition. Now we will see what is the capital gain. It's nothing but 2.9 crores minus 30.8 lakhs, which will be around 2.6 crores. Okay. Now let's take the next question. So A sold 2 flats. Okay, out of the 6 flats that he received. For that we have to calculate capital gains. Correct? So sale of 2 flats. Here, what happens is he purchased and sold. Okay, immediately. So here we have to see fair market value is 80 lakhs. Fair market value is 80 lakhs because it is a property, it is a flat. So SDV will not be applied. Here we will apply fair market value for the flat. The sale consideration is 90 lakhs. Okay. Now, since it is, earlier I said that the property was held for more than 3 years. It is for 2 years. More than 24 months, it is a long-term capital gain or long-term capital loss. This property was held for less than 24 months. So here, short-term capital gain will be about. Okay. So here, sale consideration minus FMV will be treated as cost of acquisition as per section 49. Now, tell me the value 90 minus 80, 10 lakhs will be the short-term capital gain. Okay, short-term capital gain. The last provision here is ADS under section 194 IC. Section 194 IC. 10% on 50 lakhs cash payment. 50 lakhs cash payment will be 5 lakhs. Okay. So now the question arises. When the cash was paid is not actually given in the question. So it should be paid irrespective of what is the year of transfer, date of transfer, completion year, or the year in which possession was handed over. Nothing matters. Whenever the cash was actually paid, XYZ will deduct 5 lakhs and pay the remaining amount to Mr. E. Okay, so this now we have case laws here. So important case laws. I'm just taking the important name of the important case law and what was held. Okay, so the first case law would be Chaturbhuj Dwarakdas Kapadia versus CVT. It was held that transfer happens on handing over possession under section 247(5), even if legal title not transferred. We discussed this based on the comprehensive problem that we solved just a few minutes ago. Next thing is, it says transfer of possession 53A of TOPA is say 147. Okay. So the next case law is Vembu Vaidyanathan, PCIT versus Vembu Vaidyanathan. Here it says section 45(5)(a) applies only when completion certificate is received. Okay, so this also we discussed. The third case is what it says: completion certificate. Section 45(5)(a). So the third case law is Balbir Singh Maini. Versus CMA. It says, let's take some of the first one. It says if section 53A of TOPA is not applicable, say TOPA means the Transfer of Property Act, okay? So it's not applicable, then section 247(5) cannot be invoked. Section 247(5) cannot be invoked. So these are the important case laws that I have just taken to make the concept more understandable. Now let's summarize. Okay. First, what we said is JDAs create complexity in timing of capital gain, valuation, and holding period. That's what we said, right? Timing we just discussed. What is the timing? 247(5) in case of 53A of TOPA is done, or section 45(5)(a), it says when completion certificate is received. So next we said holding period. When to calculate holding period? Purchase to date of transfer. If it is inheritance, the purchase date will be from the person who purchased it first. Okay, so that's how we have to take. Okay, to date of transfer. Next, identify if 45(5)(a) applies. See, because JDAs can be entered into by anyone. Okay, entered into by anyone. Okay, any person. Okay, but if the transferor, if the transferor is an individual or a chair, then only section 45 5A is applicable. Okay. Then the next what we have to see, consider implications of 50C, 247.5 and 194C. So I'm just summarizing. 50C says SDV more than sale consideration, then full value of consideration is equal to SDV. Okay, 247.5 we have discussed many times. Okay, transfer of possession. Transfer includes transfer of possession under 53A. Okay. 194C, 10% TDS to be deducted by the developer for the cash component alone. Okay. So next is sale of flats received under JDA will have separate capital gain given. Yeah, that is very simple because here capital gain for JDA, capital gain for transfer of property received under JDA. Received under JDA. So two different, two separate capital gains will have. Okay. So thank you for joining this session. Hope this clarified the layered complexities and the resolution. Thanks.